Queens, I got four of a kind on everything. I gotta live like a king. Hey, catch this rhythm. You feel that? That's called playerism. I'm on the scene, a player clean, poker face, four queens. I got four of a kind on everything. Dig this, living elite. I don't feel complete without kicking at my feet in a Rolls Royce every week. Maybe this is deep. Listen close when I speak. I need to at least, cause I'm too much. I'd be a fool if I love him. You'll be a fool if you trust him. Here with my niggas, we keeping it gangsta. Yeah, I'm a slayer, I'm just keeping it player. I'm fucking her now, we're man eating it later. That's maybe why he is a hater. I'm wearing all black like I'm being a raider. You talk to police, we call you a traitor. I'm running the city, they call me for favors. I'm running the city, they call me the mayor. It's getting political with me, my street presidential, she give me the... Quit banging my line, ho. Quit banging my line, ho. When you see me act like you don't even know me, ho. When you see me act like you don't even know me, ho. Come on, baby, get a clue. How you do what you do? How do you fall in love with me, but I'm not in love with you? Peace to the saints! Peace to the saints! Peace to the saints. Trying to make this a regular thing that we do. If people support the segment, then I'll carry on. First, let us get started by showing love to those who show love to us. So I'll pass it over to you.
First, we have none of the above, sent $50 on PayPal.
Baller alert.
And said tuition.
Shout out to those supporting this critical segment, which want to introduce people who are newer to paper assets, to easy, simple ways to invest and start to create and diversify a portfolio. This is not financial advice. This is not even education. This is for entertainment purposes only. Also, when I'm mentioning figures, you might just cut them down to whatever is manageable for you. So if I mention $10, maybe you think of it as $1. If I mention $100, maybe to you it's 10. If I mention 1,000, maybe to you it might be 100.
Okay, we have on Sassy brand, Bienvenido bought the black long sleeve with Janice logo shirt.
Oh, shout out! I got that one. Yeah, that's a clean one. That's like the uniform right there.
And we have Fabian said, peace to the saints, long-term investing in a company or getting in and out of a company. What do you look at on a company's balance sheet before investing?
Number one, you have to do that based on what your position is, how you're set up financially. If you're a younger person with no dependents and you're reasonably financially stable, I'd be investing for a great return in the short term, which is to say I'm getting in and out of a company. If I keep a company or a stock for a long-term play, that's because it's not performing in the way that I want it to in the short term. So I have to hold on to it to be able to turn it liquid for profit later on. That being the case, when I'm looking at a particular business, I'm not looking into detail on the balance sheet. Of course, I'm keeping an eye to the last 4 to 5 years of revenue and profit, but I'm more interested in the industry. You know, what are the macroeconomics going on right now? And then with regards to this particular industry, is this an industry of today, an industry of tomorrow, an industry of yesterday? This particular business or company within the industry, are they the leader in the industry? Are they the pioneer in the industry? Are they slacking? You know, where are they in the landscape? Also, I like to get into things that I know in industries that I know and understand, things that are reasonably predictable to me. So for example, you know, I'm into technology. So this is somewhere I like to play. I can make reasonably informed predictions. I might have some insider information here and there. I might have heard of some things that are bleeding edge. So you're always looking for the advantage, and you're essentially trying to cheat, right? In everything that you do, you want what they call an unfair advantage, which is to say that, you know, when people are making a bunch of money in sports betting, you know, it is their responsibility to try to get the edge, which is to say, figure out if the quarterback is sick, figure out if the lineman's girlfriend's cheating on him, figure out if the kicker stubbed his toe that morning. So you're always trying to get that advantage.
Okay, on PayPal, we have Al Bates said, first of all, I would like to acknowledge the big homie and say thank you for the consultation. I highly recommend it
Absolutely.
to the Saints. It will give you steps to overcome your obstacles.
Indeed. Shout out to the real ones. You dig, the ones who actually make investments in themselves and are focused on greater things. I actually was talking about Albaith yesterday because he's been one of the most prepared folks that have come, and presented a business idea. And I'm sure that he'll make many millions because he's diligent.
Carry on.
All
Oh,
right.
we have another one just came in. Albeit
Sure.
came right back on PayPal and
Okay.
said, I did as you suggested. I messaged the manufacturers, and a majority response I've received is that it can't be produced or that there is a mold up or mock up fee. The
Yes.
lowest price I've heard is 3,000 USD.
3,000? No, that's
What
not
do you
right.
suggest I do? Is this expected to have a mock up fee, or is this just unique to my situation?
So when they say mock-up fee, you have to remember that English is not their first language. So sometimes there are things that may be misunderstood. If they're actually talking about a mock-up, certainly it wouldn't be that expensive, and I'd advise you to go to someone who specializes in that. I don't think you need a mock-up at all. And with regards to the mold fee, I had warned you about this. When you're creating certain types of tangible products or physical products that are metal or things like that, or electronics, or certain kinds of plastic things, you have to create a mold to encase the technology. You're creating a shell to encase certain things. And so there'll be a mold. Like, for example, I'm creating luggage. There's a mold fee, and mold fees are generally expensive. Now, once you pay the mold fee, you don't have to pay it again, and they can use this to reproduce whatever your product is. 3,000 USD for what you're actually trying to do is very expensive. I truth be told, when you're creating an MVP, you want to be as economical as possible. I think that you can find a manufacturer who can do what you need them to do based on their existing product offering, and they'll make minor modifications. So certainly, I don't expect that you would pay more than $600 to $700 total, including shipping, to get this done. So keep searching, and remember that achieving great things is not easy.
OH sent tuition.
Shout out to OH supporting the work.
And on Cash App, we have Johnny sent tuition.
Johnny, shout out to Johnny, appreciate it.
Carry on.
So let's look at the market today. And every morning, if people continue to support this segment, we can go through this and really get you guys on some firm footing for your financial futures. And I want you to put in some money every day, if you can, if there's something worth buying. And remember, we're not women in the shopping mall just there to pass time and window shop and look at everything and maybe buy things we don't need. We're purchasing to build a diverse portfolio that will bring us wealth. And in my case, I'm being aggressive, and I've already let you guys know what my investment thesis is. This is, number one, fun for me. Number two, I want faster returns. I want larger returns. And this is a part of my discretionary budget. It doesn't really matter what happens to this money. During the current macroeconomic environment, and where we're at in the capitalist cycle, I want to see a company generally that has declined 30% in 24 hours. These are the ones I'm going to go in heavy. They declined 30% within a 24-hour period. And looking at their last 4 to 5 years of profit and revenue, it's still a strong business. It's in an industry that is growing or future oriented. And this company is the strong player in the industry, or at least they're innovative and new. Those are the companies I'm going to go in heavy on. I'm really going to pull the trigger. And there's some other companies that I'm willing to drop some coins in, depending. And you're going to get an example of how I'm thinking about that. And my goal is to share with you how you should be thinking about these businesses as you invest.
Okay, on Cash App, we have Denise said, peace to the Saints. I'm working hard every day to be great.
There you go. Shout out to Denise. Shout out to the Lady Saints. Beautiful attitude she has. And also, if we keep this consistent, obviously, unfortunately, we have to take a break on the weekend, which kills me. You dig? The market needs to be open 24/7. I mean, they got the casinos open, right? Why we can't keep the market open? But anyways, as you guys know, we did a number of trades yesterday. And so I'll give you some updates on that. So, for example, one thing we were looking at yesterday was Silvergate Capital. Was that Silvergate Capital? I took a short position on. Let me see. No, that's not it. I'll have to check back on that. But anyways, I took a short position on the company yesterday, exited the position, and basically made 40%. So if you'd have put in $1,000, you would have gotten out of there with $1,400, and you would have been able to make that amount of money within an hour. So that's what I was able to do yesterday, taking a short position on that particular company that we looked at. Now, as I said, all I'm looking at are the big losers and the big winners in the last 24 hours. So looking at the biggest daily movers. I love it when I see a company that I'm familiar with. I've interacted with their products. I understand their industry and their business. I really like that because it reduces the amount of research I have to do. So for example, biggest daily mover today, Lyft. We're talking about the ride hailing company, the competitor to Uber. Now, I'm going to engage in some metacognition with you and share my thinking. So when I'm looking at Lyft as a opportunity for purchasing or selling stock or taking a short position, my first thought is, okay, what do I know about Lyft and what have I experienced about Lyft? Well, first thing, when I think of Lyft, I think of Uber. And that's not good for Lyft, right? When I think of Lyft, I immediately think of Uber. And when I use ride hailing services, I generally use Uber. I travel around the world and Uber is around the world. Some markets you don't find Lyft is there. So that's not a good sign because they've been competing with Uber for quite some time. Generally speaking, a market is always going to have at least an option, right? And Lyft and Uber are the two major options. Lyft is losing the battle right now, but Uber's also had a lot of political issues in their C-suite. I think Travis Kalanick or something like that. He had been taken out a while ago, and he was one of the guys who are at the top, one of the founders. So Lyft has an opportunity to compete, but I don't even have the Lyft app. Do you have the Lyft app?
I do.
You do.
Mhm.
Do you use it?
If Uber is like crazy expensive, I'll look at Lyft.
So you use Uber first and you use Lyft as a backup.
Yeah.
And then I don't even have Lyft. And these kind of questions are critical as you think about it. Not only do you want to understand their balance sheet, you want to also understand, how consumers feel about the brand and about the product. This matters for the present and more importantly for the future of the company. And the gentleman was asking me earlier, like, do I want to get in and out of companies quickly? Yes, I do. But that doesn't mean I'm investing just based on the numbers. I'm also investing based on the quality of the products and services offered. And in some cases, based on the quality of the leadership of the business. These things tend to matter. So anyways, looking at Lyft, we have that little piece that Lyft is junior to Uber. And I don't even have it on my phone, and I travel around the world. So that's a big statement. In fact, I got two phones and it's not on either of them. It's a very big statement. I'm not impressed with Lyft. I like their coloration and their branding, I think is reasonably clever. And looking at their numbers, if we want to keep it simple, looking at their profit over the last couple years, from 2018 to 21. In 18, they were at 2.1, I'll say 2.2 billion. Then 2019, they went up to 3.6 billion. Then in 2020, they went down to 2.3 billion. And then in 2021, they climbed up to 3.2 billion. So there's been some seesawing going on with their profits. Now, here's the thing. Excuse me, with their revenue. That was revenue. And these are very different. Revenue and profit are very different. That was their revenue. Now, here's the problem. Their profit has always been in the negative. 2018, they had like a negative 900 million. 2019, negative 2.6 billion. 2020, negative 1.8 billion. 2021, negative 1 billion. That's bad. So to me, that doesn't speak well for the future of the company, for the stability of the company. And then they're not favored over Uber in any way, maybe price wise, but I'm not a price sensitive consumer. And that's why I would never like really try to understand a business through my personal experience. I want to ask someone else. I want to ask people in different economic classes, to get a better fingertip feel. Like if I turn and ask her, it's not going to give me a good sense because similarly, she's not price sensitive. And most people are not in our income strata. So that being the case, I want to understand this product through the lens of the average consumer, not through my lens. So this would be something, I see people put Lyft, AKA cheaper Uber. Someone put Uber's little brother. These kind of perceptions matter. So I'm not really impressed with this. If I were to buy any amount of this, I would buy it for the short term. Now, what I like about them is that they took a dive in the last 24 hours. Lyft has gone down 36%. That's a lot. And that does fit one of my major criteria, which is when I want to see a 30% or more dip. You got something to say?
Well, I'm just waiting for you.
Okay, go ahead.
We have Major Minded Soul said tuition, peace to the saints. What are your thoughts on buying indexes?
I think buying indexes is fine. It's safer. It's good for the long term, primarily. And you're buying an index kind of based on the same things that you would buy a good stock, which is the idea of you're trying to buy the dip. Indexes are fine. It's not going to be fast money, but it's going to be reliable over the long term. 5+ years. So that's cool. I mean, when we see the economy dip, that's a good time to buy some index funds.
Here we have Brian came in via Cash App saying peace to the saints.
Peace to the saints.
Carry on.
And you're diversified, right? When you get that index, you're diversified. It'll save you some time. You don't have to be intelligent. You don't have to think. And that's kind of one of the safe, cool things about an index fund. Obviously, you want to buy them when they're lower. Now, here's the thing. Lyft, I need to know why they just dipped 36%. I'm guessing there was like an earnings report, right? I'm guessing it's something like that. Not a controversy, but they reported earnings, or they shared their financials, and then we figured out it wasn't what we were hoping it would be. That's my guess. So I'm just going to go ahead and type in Lyft, and you can do this as well. And I'm going to share my screen so you can see how I go about this very simple, straightforward process. So I just used a Google search. I typed in Lyft, and as you can see here, it gives me the option to select news. So I've selected news. Anytime a company drops down 30%, it needs to be in the news, especially a major company. I usually like to look at the time that it was released to get the latest information. And so right here from CNBC, let's see what they're talking about. Stocks making the biggest moves, Lyft, Spotify, blah, blah, blah. Yeah, right. Let's talk about Lyft. Okay. So now, as I said, their branding is actually quite good in as much as they have this bright pink, and I think it's cool because you never confuse them with anybody. So I think that's nice. I like that about them. Uber is pretty plain and black, but that's because they started as a black car service. I remember when I was living in San Francisco and Uber first started, and it was only black cars. You couldn't get a regular car. And that's why when people come to me and they book a consultation at marquettism.com, I teach them about product development because I know it well. And I've had enough experience living in Silicon Valley and operating there to really tell you how things evolve, to let you know that Facebook just started off basically as a glorified status update. Then it had a wall, and now it has too many features for us to count. And Uber started off just as black car service. You couldn't call any other kind of car. And so there's just these important things that you'll come to understand as a businessman, and being an entrepreneur, you have a better sense of, looking at a company and understanding how they're going to be able to thrive due to their fundamentals or lack thereof, due to their understanding of markets and consumers. Anyways, Lyft, the ride hailing stock, cratered 36% after issuing disappointing guidance. And if you're at home wondering, well, what is guidance? Well, they're kind of talking about, the reasonable prospects for what should happen in the upcoming quarter of business. Lyft got hit by a slew of downgrades from analysts. Again, as I said, analysts are the basically the white kids who graduate from Ivy League schools and are trying to make their way in the stock market, and they crunch a bunch of data. They don't know a damn thing, generally speaking. And they try to agree with one another. That's the thing about analysts. Like, they basically establish common opinion. I would not necessarily follow analysts, except I would utilize them to understand the mass psychology prevailing and try to make my investments around that. Meaning not following it, but trying to anticipate it. Now, it says, Lyft got hit by a slew of downgrades from analysts who said Uber may look better positioned to capitalize on the broader recovering in ride sharing. So number one, if it's saying the rideshare industry is recovering, that's good for the whole industry. So that suggests to me that yes, Uber might further monopolize, but yes, Lyft will also recover if the industry as a whole is recovering, which is to say that this 36% drop that it's experiencing in the last 24 hours will probably be closed at some level. So, I can buy a portion of this, and even if it doesn't close that gap, if it closes, 10% of that gap, I'm going to make good money. And I like that. That's why I like to buy it when it's dropped so far. Did you have something?
No.
You're just looking at me? Okay. Saw you. Bam. Uber shares were also down 4%. Now, number one, I like to see that, not because I'm hating on Uber, but I like to see that because if Lyft is down and Uber is also down and Uber is the main player, it's giving me a clue as to what's going on in the industry. So if Uber's also slacking or lagging or declining, then that's letting us know part of the decline that we see in Lyft, well, yeah, it came due to some of the unique things in this business, but also the greater economy or the greater industry. So that lets me know that this might still be a reasonably strong business, which it's not, because we looked at their balance sheet. It's in shambles. Anyway, so that was a very brief go. Basically, the only reason this thing is declining is because their executives were honest, and said, "Hey, upcoming quarter isn't going to be that hot," and people are overreacting. The stock market, you're reacting to mass psychology. So what I'm about to do is I'm about to buy up some Lyft. That's what I'm about to do. So excuse me for a moment. So right now, I actually already bought some. I'm about to buy some more. I bought some before I got on here because I like to check my stock first thing, check the stock market first thing in the morning. I had to take a couple meetings, which is why this is a little later. But I'd like to do this moving forward right when the market opens if I don't have meetings. Anyways, so I'm going to buy some more of this. And one thing I want you guys to understand about the stock market is you don't always win, meaning you're not going to win on every buy and sell, every trade that you do. What you're doing is you're diversifying across a number of verticals, a number of industries and companies so that in collective, in totality, you're able to win. And the goal is to fill your portfolio with as many good picks as possible. There's another company that just IPO'd, actually made its initial public offering, which is to say it went onto the New York Stock Exchange for the first time. And it went from being a private company to a public company, which you and I can purchase. And this one goes under the ticker symbol. A ticker symbol is basically an acronym that it's recognized by. MLYS. It just IPO'd and it went up 24%. Actually, it went up 32%. Went up 32%. And right now it's just up 24%. Generally, with IPOs, you need time for the market to assess what it's really worth. So you're going to see it either shoot up really high or it's going to fall down really low. And these things happen fairly quickly, which is why I would prefer to take a short position on an IPO, especially if it goes way up. I'm going to take a short position, which is basically a prediction that the stock is going to tank or go down some amount. Most brokerages they'll have a shortage of shares for you to take a short position on when you're considering IPOs. Like, for example, the brokerage firm that I use, which is not paying me to speak about them, so I ain't mentioning them. They don't have any of this particular stock for me to take a short position on. They do provide me the option to make a phone call and pay a significant interest rate to take a short position, which I'm not going to do. But if they did, I would absolutely take a short position on these guys. And I would have probably been correct because when the market opened, they were at 32% up and now they're all the way down to 23%. So basically I would have made 10% on my money already. So I'm not going to do it. I don't have the major interest and I'm not going to take out the time because I don't think that, trading stock is a job. I just want to be, people think that they're day traders. They think that they trade stock for a living. In my personal opinion, that's not a real job. And the stock market doesn't offer real value in general to the society. It's a pastime for guys who like to play with money and make some quick hits and want better odds than Las Vegas. Okay. Now, there's another company called Oscar Health, and Oscar Health has shot up 25% as of now. Earlier today, it was up 32%. So it's also lost a significant percentage. And the question is, will it lose more? Is there an opportunity here? So my first thing I want to make sure, since we saw one IPO, is that this one did an IPO and it did not IPO. So that's good, which means if I want to take a short position, my brokerage will allow me to do that. So it's went up 25%. When I see something drop more than 30%, I'm looking at it like I might want to buy it. If I see it go up more than 30%, I'm looking at it like I might want to short it. This is currently not up 30%, but it was close enough and it used to be. So I might consider shorting it. So I want to do a little bit of research to understand why did it shoot up. And while I'm doing that, you guys can send in your comments or questions using this cash tag or using PayPal. And feel free to interrupt me because this stuff I'll have to get deep in.
Yep.
So I'm going to enlarge this for you so that you guys can see this full screen. There you go. And so the stock that I'm about to search is called Oscar Health. And so I'm going to go ahead and just type in Oscar Health and hit it into Google. And it says Oscar Health is an American health insurance company founded in 2012. Great. Now, the first thing I'm thinking is, okay, so they're in the insurance industry. Insurance is a good business. You know, big guys like Berkshire Hathaway and Warren Buffett, wealthiest man on earth, usually, he says, that's a good business. And I tend to agree. He knows. So insurance is a good business. And this is in the health insurance industry, and health insurance and health and medicine and pharma has been doing really well, especially under this Biden administration. So these are good signs, and they're a part of a strong industry. And health is an industry where it's not ever going to become obsolete. You might have technologies, processes, and medicines that become obsolete, but this is not about to become obsolete like this industry. So that's a good sign there. Now I want to look at news, like why did they jump up all that money? Why Oscar Health stock is skyrocketing today? Oh, that's exactly what I want to know. And shout out to this particular company. I met a nutcase liberal woman at a fundraiser a couple of years ago that worked for this company. Total psychopath. Anyways, why Oscar Health stock is skyrocketing today? Oscar Health skyrocketing 21% higher. The big gain came after the company announced its 2022 full year and fourth quarter results following the market close. So it's basically saying that the company performed well. They shared those results, and then investors were thinking, or excuse me, potential investors were saying, hey, they're strong, let's get in. Now, what happens when everyone runs to something at the same time, it's going to inflate the price. And that's generally not a good time to buy. You never want to buy high. You want to sell high, buy low, sell high. So my question is, have they inflated the price too much beyond true value? Now we know that it appears that the company is strong because they just shared that they got a good balance sheet. And that's why all the investors, institutional guys, rush toward them. I'm just going to take a real quick look-see at their last couple years. It's a newer company. They don't have financials available until 2019. And in 2019, their revenue was 400 million. Their net profit was negative 260 million. And we've basically seen a trend of not a trend. Their revenue in 2019 was 480 million, and 2020 was 460 million. So it declined, which really shouldn't be happening with a company in the medical industry, because we've only seen medical demand increasing, right? Shout out to Gabriel. And then in 2021, it skyrocketed to 1.8 billion in terms of revenue, but somehow they still had negative profit. Even with 1.8 billion in revenue, they had negative 500 million in profit. So, you don't expect medical companies, pharmaceutical companies to really, take off straight away. But in the case of this particular company, if I recall correctly, they are a health insurance company.
Okay, while you're looking that up, we have none of the above is back on PayPal. He said, Mr. Burton, can you elaborate on the concept of shorting when it comes to stocks increasing by 30%? Is that essentially shorting your hold of that stock in order to maximize your profit once you've traded it?
Give me a second, because shorting it's not a terribly complex concept, but it's also not simple. And so if you give me a moment, I'll just grab a dry erase board for you.
Okay, as you walk away, we have EJ said, I'm still a newbie to the world of finance, and your knowledge brings excitement. Peace to the saints.
Peace to the saints. And tell them to get in their questions now, because we only gonna go as long as people are supporting.
And we have Joshua sent tuition via PayPal.
Shout out to Joshua. Is that Joshua in the same city?
No, that's the other Joshua's at the conference.
Oh, okay.
And we have Gabriel, who you already acknowledged, sent tuition on Super Chat.
All right. Here we go. Now, obviously, there you can look up more information on YouTube about, what is it to short a stock. So generally speaking, people make money when a stock is going up, right? They're buying a stock. So let's just say this is Disney. And by the way, I don't like Disney. So Disney is at $5 per share. And you're like, whoa, that's really low. So you go ahead and you buy Disney. You buy Disney at $5 per share. So you purchase it and then you wait. This is time here, right? This is time. So then you wait. And maybe 5 days go by or 6 days go by and Disney rises in value. So your share of Disney that you bought went from $5 to $10. Now is probably a good time to sell. You've made money. People are typically buying a stock when it's low, hoping that it raises in value, then they sell it and they've made money. If you bought it at $5 and then it raises up to $10, you've doubled your money. You've made money. That's great. Most people are in the stock market buying low, selling high. And these are the people who always want to see that the stock market's going up and up and up, and they're obsessed with the stock market rising. These are the kind of people when the prices dip, maybe it went from $10 and then Disney declined in value and it went down to $3 per share. These people would be mad or sad to see the price decline. They're mad or they're sad. They're going to say it's a bear market. It's no good. Well, it turns out you can also make money when Disney goes from $10 to $3. That's called taking a short position. I'll tell you exactly what we mean when we say take a short position. That means you're going to sell it. But here's the difference. You don't have any, okay? You don't own any Disney. You see that Disney's at 10%. You think that the price is inflated. You are convinced that the price of Disney stock at $10 per share is too high. The price is going to go down. You're sure it's going to go down for some reason, but you don't own any Disney. So what you do is you take a short position, which means that your brokerage firm is going to lend you some shares and you're going to return the shares. Let's just assume they lend you one share. So what you do is you take a short position on Disney and you get the shares from your brokerage firm. You take a short position, you get them at $10. You get one share at $10. You have one share of Disney at $10. You wait 5 hours, 10 hours, maybe a whole day, maybe 2 days. Usually you want to do this quickly because when you borrow a share from your brokerage firm, they're charging interest usually. Anyways, you borrow one share at $10. The price drops down to $3. It did what you were hoping it would do. Now that the price has dropped, now you want to return that one share back to your brokerage firm. And you're going to make money off of the difference, which means this. The difference between the $10 when you borrowed it from your brokerage firm and then you gave it back to your brokerage firm, the difference is $7. That would be the profit. The percentage
that the particular share price declined, which in this case would have been 70%. You gained 70% in profit. So you've made $7. You have to close a short position. That's what it's called. You open a short position and you close it. When you open it, that means you're borrowing one share or however many shares you want from your brokerage firm. When the price declines enough that you're satisfied, then you give those shares back to your brokerage firm and you take the difference. You make profit off of the difference, which is how people make money when the market is going down. But you should be asking me, Marquette, what happens if I take a short position, or shall we more formally say open a short position, when the price is at $10? I'm expecting the price to decline, but the price doesn't decline. It does something else, which is why I say this is high-tech gambling. Instead of going down to $3, the price goes up. It goes all the way up to $13. Oh no. Price then went up to $13. Now, that means you've lost money because you're still going to have to close your short position, which means return the one share that you borrowed from your brokerage firm. You got to return it. And you're going to have to pay the difference, which is to say that when you took out the share, it was $10. You opened a short position. Now the value per share is $13. Which means instead of dropping down 70%, it has increased by 30%. So you've lost 30%. So that 30% increase in price, just for example, means that you now lost $3. You're down $3. That's negative $3 that you just lost. And you basically are losing money. That's what a short position is. You're hoping the price goes down and then you return the share back to your brokerage firm. A short position, you could open a short position and close it within the space of 5 minutes, 5 seconds, 5 days, but you're being charged interest because you're borrowing the shares. Conversely, with typical trading, you're buying the shares. With a short position, you're borrowing. That's why you're being charged interest. It's almost like a loan. They're not loaning you money, they're loaning you the shares. And you're hoping that when you're loaned the shares, the price declines and it declines as quickly as possible and as much as possible. Carrying on. Thank you for that question. And there's a lot of very clear, graphically animated YouTube videos that you can watch on that concept. And that's a bit of an advanced thing in trading. There's a lot you can do in the markets, and that's a bit more advanced. People typically don't do it. It involves significantly more risk. I don't recommend it to casual folks or beginners. Give you guys a little bit of time to support the workout here. So we know if we need to keep doing these, we might not need to.
Right.
Because, these kinds of live sessions I only do because they're requested. This one was requested by the members. Now we're 2 in. But, if people don't really mess with them, I'm not going to do something that people don't care about, of course. Let's see. So anyways, we were looking at Oscar Health. And I want to read a little bit more about Oscar Health. So as I said, Oscar Health is in the health insurance. It's a health insurance company. Now, when I see a company in the health vertical taking a longer time to start becoming profitable, maybe it's a drug company, like they just released a new drug. It just got approved by FDA. We're still trying to get it into the hands of doctors and consumers. I understand it might take years, but a health insurance company, I expect it to kind of get on board and start turning profits sooner than a drug company. So in this case, I'm not liking what I'm seeing with regards to their profits. They're clearly growing, but I don't like what their profits are looking like.
Okay, we have none of the above who asked that question that you left the board out for. He's back on PayPal for the 3rd time. Said, wow, this is the inverse of the sell high, buy low. Short positioners were probably eating during the meme stock hysteria. Awesome breakdown. The whiteboard is the canvas of the sim field. If you know, you know. And then on Cash App, we have Edis said, thank you for explaining this.
Shout out to him. You said Ennis?
Edis,
Edis.
EDIS.
Okay, for sure. Okay. So right now, what I'm asking myself is, do I want to take a short position on Oscar Health? And anytime I have to second guess a short position, I usually don't take it, because a short position, you're generally being charged interest. A short position is a higher risk proposition. A short position, you either need to pay close attention to, or you need to set a stop limit that's going to limit your losses.
Kareem said, tuition out here giving game on the whiteboard. I like this new approach. Peace to the saints.
Peace to the saints.
We have Ken sent a Cash App. He said, tuition for these financial lives. Peace to the saints.
Peace to the
I
saints.
did see a question in the chat. He said, does that share to be paid off if you bet against the reality?
So one, you probably shouldn't use terms like reality. You want to, maybe be a little sharper linguistically, just to make sure that I understand what you're saying, because we're talking about money here, and money can be a bit of a serious topic. You don't want to, get inaccurate advice just because, you use one word and I understood it to be something else. So when you say, does the share have to be paid off if you bet against the reality? By the reality, if what you mean is that if you're predicting that the share is going to go, the share price is going to go down and instead it goes up, you're going to have to pay that off. Yes, that's correct. You're going to lose money. And the amount of money you could lose could be significant. I've lost significant amounts of money taking a short position and not paying attention to it and failing to set up a stop loss limit. So you can lose significant amounts of money. And you have to remember, you're going to lose in two ways if you lose money. Meaning, when you take a short position, you're borrowing the stock. So you're being charged interest. So you already have that fee that just keeps going. And that fee can vary depending on your brokerage and also depending on the rarity of the type of stock that you're shorting. So that's number one. You're paying interest. Sometimes the interest is charged hourly. Sometimes the interest is charged, in different ways, but it's expensive, generally speaking. And you're banking on the idea that your thesis is correct, and you're hoping that the stock not only tanks in value, but it tanks fast. Because if it's tanking, but it's tanking slowly, your interest payment might be higher than the profit you're making on the decline. You see what I'm saying? So what I like to see, like yesterday, if you guys tuned in yesterday, I took a short position on a stock, and that stock tanked so freaking quickly. During the live, we saw the stock lose like 10, 20%, just while I was talking. So I made like hundreds of dollars just while I was talking because it tanks so fast. And then I can give it back to the brokerage, which is to say, close that position. And I barely accumulated any interest fees. Maybe I accumulated like $3, $4 in interest fees while I made $400. And the brokerage is going to settle that debt for me automatically. So say I make $400 and the interest fee is $300. They're going to give me, $397. So that is ideal. And I'm going to read a little bit more about this Oscar Health because, for some sick reason, I like taking short positions. And
just so that didn't confuse people, you said if the interest fee was $300, I'll give you $397. You meant if the interest
$3. Yeah, I meant if the interest fee is $3, though, and you made $400, they'll give you $397. Correct. Thank you.
Yep. Carry on.
Okay, so here we are with Oscar Health. I just want to read a little bit more. See if there's any insight. Oscar Health reported total revenue. I already read about their revenue. Okay, the result was roughly double the revenue generated in the prior year. That's always a good thing. The technology-focused health insurer posted a Q4 net loss of blah, blah, blah. The result was better than the net loss expected by analysts. So as I say, when you outperform the analysts, generally your pricing, your stock price is going to increase. Now, being that they made such big gains in this company, in this corporation, I should say, they made such a big gain because in terms of profit, in terms of revenue from 2020, they made $462 million. In 2021, they made $1.8 billion. That is such an enormous jump in revenue. I don't know why. I don't understand why. That's something I'd want to research. I'd really want to understand how they did that and if there's a way for them to do that again before, you start taking significant bets against these guys. Another thing I'm doing, I'll generally look at a couple charts. I want to look at the last 24 hours. They went up 26%. Then I want to look at the last week. Okay, they're up 21%. Then I want to look at the last month. Okay, they're up 73%. For the month, I look at the last year. They're down 28%. Okay. So when I like to take the short position also is when I see that they're kind of reaching peaks, which is to say, if I looked at the last year and the trend has been going this way, I know that, okay, it's going to have to take a little bump. If it's higher than it's ever been, it's starting to reach an asymptote, or it's reaching some point where it's going to start to tank, or at least it's going to retreat enough that I can make a little bit of money in the short term. So in this case, when I see that in the last year, it's actually down 28%, it can maintain at this price, at this share price. It can actually maintain here because it's been in this territory before. So I do not feel comfortable taking a short position, even though my soul likes to take short positions. I can't do it in this case. The data is not telling me that that's a smart move. So I'm just going to leave that where it is. Then there's another company. And this one, I think I might take a short position on. This one is called Mineral YS Therapeutics. So check this out. Let me go ahead and type this one in. So I'm going to tell you why I'm more interested in taking a short position on this company. So this company has basically grown in the last 24 hours. The company hasn't grown the share price. Let me be accurate. The share price has shot up in the last 24 hours by 20. Right now it's 22% up, but it was 32% up when the market opened. So this company was up 32% this morning, and now it's up 22%. So it's already lost 10%. It would have been a great opportunity to take a short position like straight away in the morning.
OH is back with more tuition.
Shout out to OH supporting the work. But as I said, this one was an IPO, so you can't take a short position against it. Actually, I already spoke about this one. But I really would love to. I definitely would not invest in this company. The price is inflated. There's not enough data. And I want to point out something to you guys, another reason not to buy this company. So remember that stock market is also psychology. And it also requires a lot of promotion to drive psychology. You got a company that just IPO'd, and IPO is a big deal. Generally, a lot of people within that corporation are making money. Everyone should be happy. You need to set the stage to have a successful IPO, right? So here's the name of the company. I'm just going to type their name into YouTube and see what comes up. Just real quick, you can see the name right here. I'm just going to enlarge this so you guys can see the name. Boom, that's the name of the company, all right? I'm going to cut and paste that into a YouTube search and see what comes up. They just IPO'd, by the way. They just had a great opportunity to make a ton of money. So I just typed that in. That's their company name. Where is their YouTube channel? I don't see a YouTube channel. Okay, fine. They don't have a YouTube channel. It happens. Where is their name and a title? Does anyone care about them? Is there a video that's just about them? No, no, no. They're absent. Someone's screwing up. Their marketing guy's screwing up. They must not be bleeding edge. They must not be innovative. Something's wrong. This price is going to tank. Absolutely. And I think a lot of the pros are taking short positions against them already, which is why I can't take a short position because my brokerage doesn't have any shares to give me. Also, it's an IPO. But the point is, I would never invest in this company. And being that it's an IPO, you also have limited information, right? You can't look back 4 years and see what their data is, right? You can look back to 2020 and see that their net profit was negative 3 million. In 2021, their net profit was negative 20 million, and their revenue was 000. So there you go. Their value will not be increasing. I don't believe in this company at all. I think they're going to do terribly, and eventually people are going to lose their shirt in this particular company. Carrying on. So we looked at Lyft, we looked at Oscar Health, we looked at Mineral, and these other companies, there's not enough change that I find them to be interesting to look at, but I'm just going to look through at all of the biggest movers for today to see if there are companies that you guys are more familiar with, because I think you guys will maybe benefit from kind of taking a look at them. Like, so for example, Rumble, which, is very much so in our space in the YouTube game, they lost 13% in the last 24 hours. And you guys are familiar with Rumble. So when you guys see something like that, a product that you've heard of, a product that you've used, you've checked out, you have a little bit of insider knowledge, right? So we for sure should take a quick analysis of Rumble. Number one, it's headquartered in Toronto, which I generally don't like to see that. I prefer American companies. They're already in America. They have access to a bigger market. Canadian companies, their number one goal is to get into America. If you're an American company, you're already here, right? So there's that. Again, a newer company, in as much as you can only look at financial data from 2020. They have $0 posted in terms of revenue for 2020 and 2021. However, for 2020, they have about 2 million in, wait, what? About 2,000 in losses net profit in 2020. That's so weird. That's so weird. And then in 2021, they have $18 million in losses. In 2021, they have $18 million in losses with $0 posted in revenue. So these numbers look extremely strange. So forget YouTube, forget tech. Just as a business guy, this is very atypical that you see the indication of K to indicate thousands when you're looking at financials for a public corporation. This is very weird. I'm extremely suspicious of Rumble. I'm wondering if someone's scamming in their C-suite or if their books are being cooked. Something is really weird, okay? Okay, I see their revenue for the last 12 months is at 10 million. Something's potentially really weird here. Let me see. So let's see why. Okay, so they lost 13% in the last 24 hours. In the last week, they are down 10%. In the last month, they're down 6%. So the share price right now is $8.92. And okay. So, okay, that's a low in the month. Okay, in the last year, they're down 37%. This is not their lowest. They've gone down all the way to $6 in the last year in terms of share price. So they're still quite a ways off from that. But let's look at the news and figure out why they tanked, and let's see, if this is worth buying, because they're down 12%. It doesn't fit my thesis for this environment. So I would put in just a couple coins. But what I want you guys to remember is that you also want to look at the industry, and what we know about the industry that Rumble's in: social media, video platforms, YouTube space. They're the go-to guys for not being for not having censorship, and they're really the main one known for that. And I think that that's going to be a growing space. Freedom of speech will be a growing industry. That's strange when freedom of speech becomes an industry instead of a right. That's crazy. Anyways, so I think that's good. So I like that about these guys. So I just typed Rumble, and now I'm clicking news. And for some reason, it's telling me about Booker T's Royal Rumble. That's not. I'm just going to type in Royal Rumble stock. Okay. Rumble stock opened at $10. And you see all of this information is fairly old. So that's kind of weird that you've had a major change in their stock price and there's no clear explanation as to why. They've tanked 13% in 24 hours. So I'm a little bit unnerved by that. So let's click something. What do we want to click here? So Rumble stock opened at $10. That's not interesting. Rumble receives $250,000 investment 1 week ago. So if this is talking about the Rumble that I'm thinking of, right, then that's not a good sign. To me, that's not a good sign because $250,000 is really pocket change, especially to a public corporation. So if you needed a capital infusion and you accepted $250,000 as a public company, you're really low on capital. And that's a very bad sign for a public company to need $250,000. I mean, that's like that's car money. That's not going to keep a corporation afloat. It's a pathetic amount of money. So let's make sure that this is the same Rumble. So you can see the ticker symbol here. And I'm going to make sure that this is the same company. Yep, RUM. Okay, that's a really bad sign. So I'm now wondering if there's some things going on inside of the company that have not yet become public, which is why you can't find any news explaining why their stock price has declined. The most recent Form 13F filing that blah, blah, blah has made with the SEC, the investment fund shelled out close to $250,000. Okay. Rumble was presented with a financial contribution for $148,000. These are really small amounts of money. Rated the company's performance in the market as market performed overall. Okay, Rumble stock, blah, blah, blah. None of this is interesting or meaningful. I think that there's something bad going on at Rumble, just based on what I'm seeing here. Honestly, based on me having heard of Rumble, having used it, I'd be more inclined to want to put in some money. But as a technologist, looking at their user interface and their user experience, which their user interface is like very old looking, their user experience is quite confusing. It's not a great product. They're smart in that they've stepped into a niche that is going to be growing, but I don't think they have the leadership, the business leadership to really capitalize on the opportunity. I would wait until their price recovers and then take a short position against these guys when they get a good rise in the price.
Yeah.
What? You agree or what? Yeah. It seemed like you were laughing or something for a second. Okay. Yeah. So they're screwing up. They're screwing up. Someone writes that they recently updated the UI. Yeah, I looked. I still don't think it's good. That's the problem. That's the problem. Yeah, I think they might even tank even farther. They deserve it as a business. So I couldn't do anything with these guys. Anyways, that will conclude for today. I'll give you guys some time to send in any comments, questions, objections, tuition that you'd like to send in. And I'm not sure if I'm going to continue this segment. Not sure this segment is a good use of time.
If you're like researching stock on your own, it could be a good time. But if you're
I research stock pretty damn quickly, and
Yeah.
I don't need a dry erase board to research stock.
Yeah.
You know what I'm saying?
Yeah.
And the time, that I would do my trades, I would make way more money than lose money.
Okay.
Yeah. I mean, a lot of the research I just did for demonstrative purposes.
Yeah.
Rumble, pathetic though. Those guys are I think they have some problems in that business.
OH came back in for the third time.
Shout out to OH.
It's the same consistent people.
Yeah, it is the same people. That's why we got to do stuff for the members. Anyway, Saints, it's been a real pleasure as always having this time to fellowship with you guys. I hope that you all continue with your journey and know that this should be some part of your financial picture. And this stuff is fun, but remember that experience is critical. That's why I could look at Rumble from the outside and tell you, based on like the things that we just considered, that something's wrong there. Something's definitely wrong. And $250,000 for a public company, like honestly, if I was running a public company and someone offered to write me $250,000 check or a $138,000 or $140,000 check, I'd be like, nah, you could keep it. It's fine. Like, it's not even worth the ink on the check. It's a waste. You can keep it. Appreciate it. Because you're a public company. People need to be cutting checks that are at least $500,000. And even that, you might just wipe your butt with it. But, we can start a conversation, but we really need checks in the range of $2 to $3 million just to be serious. Otherwise, it's like a slap in the face to accept that kind of a check. And it signals that things are not going well. You're short on cash.
Okay, we have Sergio sent tuition.
Shout out to Sergio.
We have Brian said, if you have the time, would you give your opinion on Ron DeSantis' program to fly migrants to blue states?
I would probably just fly them out of. No, I wouldn't even fly them. I would probably just like push them out of America. Migrant means like illegal, right?
Yeah.
You know what that means? Yeah, if they're illegal, I would have them exit our country and typically, if I can, at the expense of the country that they left. So, if they came here illegally from Albania or Germany, then I would have Albania or Germany foot the bill. So I just keep a running tally and then force that country to pay for that return of that person.
Okay, and then on Cash App, we have Ivan, sent tuition.
Shout out to Ivan. That's Ivan and GA.
Ivan is eight, yeah.
Yes, indeed. Shout out to Ivan.
And we have Norris, tuition for the intellectual game.
Yeah, this is higher level stuff, and people often try to make the stock market more complex than it is, and it's just not necessary. And truth be told, if having like a bunch of charts and all that good stuff made you really wealthy, then the analysts wouldn't be analysts, they'd be ballers, and they're not ballers. I personally know these people. I have good friends who are analysts. They live in Manhattan in small apartments. They live in Manhattan. They got housemates and roommates, and they're not even cracking six figures. And if they are cracking six figures, it's low six figures. The people who are really making money in stock are either like Nancy Pelosi, because she's cheating, she's doing insider trading, or people at large firms, and they're using algorithms and all of these complex technologies you have no access to, or it's Bernie Madoff type figures that are also cheating, and they're doing this through various Ponzi schemes, Ponzi type schemes. Or it's people who are actually within the corporations, and they're also essentially doing insider training and giving tips to people. And then there's the business class, people who are actually the creators, the bleeding edge technologists, the innovators, people who have understanding and can make reasonable predictions through creativity and intelligence, the kind of predictions that algorithms can't make, because AI is not intelligence. AI is a way to simulate an intelligence, but it doesn't have creativity, or it's not good at predicting certain kinds of things, namely psychology.
Someone has asked what PayPal was. It's markletv@gmail.com.
I actually made a banner with it. So there's the banner. How you like that?
Good.
I'm prepared.
Yeah. Your Cash Talk banner disappeared though.
Oh yeah? Okay, I got another banner. How you like that?
It's nice. Okay. Super.
I just want you to ask me one more thing so I could just have another banner.
I saw that earlier when I was looking for the cash tag.
You saw that one?
It disappeared, yeah.
Yeah.
On Cash App, we have Joseph sent tuition.
Shout out to Joseph. And remember, you guys can buy stock every day. You can buy as little as $1 in stock, which means you're buying fractional shares. So say a company you like Spotify, they're trading at $10 per share. You don't have to buy a whole share. You can buy a fractional share, which is like 10% of a share or 8% or whatever percent you want. So you can put $1 in Spotify if you want, which means you're able to buy stock every day. You can create a diverse portfolio over time. And sometimes you look at the stock market and there are no good buys. I think I only bought 3 stocks today. Oh yeah, and I do want to give you an update on some stocks that I bought yesterday. So yesterday I bought Digital Turbine, for example, and basically it has not moved at all. I've not really made or lost any money. It's basically been standing still for 24 hours, which is rare. That's the one that I bought yesterday. That one hasn't moved. I bought some Lyft. That one hasn't moved. That was today, so I wouldn't expect it. And so it's been, pretty standstill. These are things you check back, depending on how quickly you want to make your money. You check back daily, check back hourly, or in a week, what have you. In my case, I buy and sell every day. So, I'm going to check back tomorrow morning.
Okay, none of the above who sent a baller earlier, and then came in 2 other times. He said, instead of a daily live stream, why not just a monthly video of all the stocks that you've bought?
One, because I'm not sharing my personal business. You heard me? Like, I'm not here to say, hey, here's my portfolio. Like, make your portfolio look like my portfolio. Because if I do that and I'm sharing it like on a monthly basis, it's too late, right? So if I wait a month, say at the end of February, like, hey, these are all the stocks that I bought last month, that doesn't mean go buy them now. It might be too late. Like, I'm buying them when they drop, right? So that's why, getting it in the morning when the stock market opens is kind of critical. Timing is important. And even if I did it weekly, for example, a stock might be down 30% today, and then, in 3 days, it might be up 80%, right? That's how the market is. So timing is critical. It's just like boxing. Timing is very important. Um,
Okay,
Go ahead.
we have Kofi who asked about the PayPal. He sent a PayPal. He said, opinion on AR, VR tech for the future. Peace to the saints.
AR VR has been waiting forever to explode. I kid you not. When I was founding Fletch, I kid you not. That's how freaking long we've been waiting for this thing to pop off. I was founding Fletch. I remember I was in Washington, D.C. at a competition I was in, which I won. And there was a AR VR like experience that you could do. And I remember thinking, oh, this is pretty cool. The challenge with it is obviously number one has been a hardware problem, which is who's going to dominate the headset space. And then secondly, is like which industry is really going to adopt this. I think that we're already seeing that in the video game space is doing all right. And also in the military space is doing okay, even though truth be told, I think that was just like some insider deals. I don't think it makes a lot of sense for the military space, truth be told. I don't think it's the best way to simulate things in that space. But long story short, we're already seeing it in the video game space. I think it could make sense eventually in the pornography industry. I don't think that those people are intelligent enough and like skilled enough to actually make that happen and put that together. But I think that if you had like a clever group of people who had skills in audio visual, hardware, software, you could put together a really compelling experience for perverts, right? A really compelling experience. But I don't think it'll ever happen because you don't have a lot of great minds going into the pornography industry. It's just something that people kind of like frown upon and look down upon, which I'm one of those persons. So I would never go into that industry, however good my idea was to apply to it. So really we're looking at seeing it thrive within video games. And that's a good industry. It's a lot of money to be had, but it's not thriving in the workforce, excuse me, in the work field, in the remote collaboration field, which is what people were expecting, that you'd be using VR to communicate and collaborate with people in Hong Kong in real time, and you'd make great rapport with your colleagues there. I personally know a founder who still has a business in the AR VR space, augmented reality. And it just really, and he's a great technologist. He's an excellent hustler. He knows how to raise money. He's very well networked. And they just have never really cracked the ceiling on $5 million. I think they got $5 million total in incoming money. And they only got to a series A. And it just seems like they're kind of stalling out because it'll never apply well to the workspace. Because the truth is, even the research indicates by University of Pennsylvania that the ideal work team size is 6. Okay, cool. But the productivity levels of that 6-person team are astronomically higher in person versus remote. And major corporations, when they have meaningful collaboration, they're going to fly you out. Hey, hop on a plane, head on over there. And there are very few things that are going to be better, using augmented reality and virtual reality. I think medicine is one opportunity. And I think that we might see it work in medicine, but that's still going to be a limited consumer base because it's really going to be around the training of physicians and surgeons. And then we have to remember that even surgery itself is starting to be overtaken by robotics. So I think it's something that, people have been waiting to see explode for like the last 10 years, and it just hasn't. And so I don't have very high hopes for AR, VR, augmented reality. I would be more interested, if that's kind of interesting to you, I'd be more curious about how our television screens, or not television, but just screens in general, how will screens evolve? How will we start to understand what we mean when we say 3D? How can we have that experience without the headset, right? So I think that is where we should be looking to see innovation coming, whether it's even thinner screens that can be rolled up like paper, screens that are, provide you a 3D visual experience without having to have a headset or special glasses. And that's because the screen has a recess to it so you can see depth. I think those are the interesting things in the augmented, visual aspect.
Okay, we have Brandon said a girl with a guy was reckless eyeballing a player.
All day.
They split up at the store. I approached the man asking if she was his girl. He told me yes, so I didn't approach the girl. Saint versus sinner advice.
Bruh, number one, these cats are haters, and so they will lie to you. So I want you to understand this. I can't tell you how many times that's happened to me. And if the shorty is bad and she really a reckless eyeballing a P, I'm definitely gonna speak up, but I'm gonna keep it G, and I'm gonna approach the dude while he's with the girl so that I could get the truth. And this is what I mean. If you approach just the guy separately, then he might say, yeah, that's his piece, but it's really not his piece. He's just like her little weirdo friend, and he's jealous or feeling protected, overly protective. So he's lying. There have been times I say, hey, is this your old lady? I'm talking to the guy. And then the girl would be like, nope, I'm single. Nope, he's my friend. She gonna speak up, let you know what it is. So I 1,000% would have approached him while she was there. And so I think you might have took an unnecessary L there. But I respect you for keeping it G. That was the manly thing to do, is talk man to man.
Okay, on Cash App, we have Marvin said thoughts on digital marketing.
One, you should probably be more specific in the future, but I'll tell you this because I've done a lot. I spent a lot of money on digital marketing of various things, whether it's physical goods, digital goods, softwares, apps, clothing, like brands, videos. I've digitally marketed lots of things, and I've spent in the low six figures trying to do that. And one thing I can promise you is that ad units, whether you're running your ads on Instagram, Facebook, or YouTube, are very overpriced and they return nearly no results. Twitter has decent returns, but they're very expensive. I'd say Twitter ads are way more valuable than Instagram, Facebook, and YouTube. And that's not because Twitter's a better platform, but for some reason you get better ROI on it. And that could be because other platforms are scamming. I don't know. Twitter somehow generally returns better results, but it's expensive. Whereas you would spend $500 on Facebook and get zero outcome. You can spend 500 on Instagram and YouTube and get zero outcome. So you really want to be able to find some organic virality to what you're doing. So you really want to be thinking through content strategy. Um, Thank you for your question.
Okay.
Cool. Yeah, digital marketing. It's a squirrely thing. And mind you, most people who think they are digital marketers, they don't know anything about it. They don't know what they're doing. They're non-technical. And digital marketing nowadays is very technical, which is to say, you really want to hire a technologist who can automate certain processes for you. Like, for example, when I was running Fletch early on, like right after we had changed the name of the lead product to Fletch, I had this engineer who was able to write a script that would go through Instagram, scraping all the Instagram usernames from certain accounts, namely college accounts. And then it would automatically email if they had an email address or an email address listed, or it would send them a DM. So that was very helpful because it allowed us to generate essentially an email list or a contact list, and it automated the outreach, and it allowed us therefore to have hot leads and get a better chance at closing some deals. So those are the kind of things that you need, and that you're not going to like necessarily be able to pay for that the same way you pay for an ad unit on Facebook. You have to like hire an engineer to do something like that. So that's the kind of thinking that you need to put into what you're doing. And remember, not every platform is good for everything. Instagram is good for selling clothes, but it's not good for selling apps. And we were using Instagram trying to reach, middle-aged people who are higher up at a university. And these are the things you learn with experience. And most of the people on YouTube that have all these courses and all this advice, they don't have experience. They haven't done anything in the real world. Saints, it's been a pleasure at this time to fellowship with you. Until next time, peace of the saints.